Hello there, good afternoon to everyone. Thank you for taking our time to attend this edition of Blue Talks webinar. Today we'll be talking about SMEs and how and startups, and essentially how to build your business, what you need to know. We have a resident expert here, Mr. Ayodele Ojosipe. He has a wealth of experience behind him advising startups, advising businesses and entrepreneurs on how to move their businesses forward. We implore you to listen and to take down some notes. He'll spend some time going through this wonderful presentation that he has put together, and then we will have a Q&A session afterwards. We'll catch you right afterwards. Thank you for coming, Mr. Ayodele Ojosipe. So we're just trying to get the presentation slides up. We'll be up in momentarily. Yes.
Okay. Good afternoon, ladies and gentlemen. Thanks for joining us. My name is Ayodele Ojosipe, and I head the enterprise banking space for Stanbic IBTC Bank PLC. This afternoon, I'll be taking you through how to grow your business from startup stage, how to sustain it, how to scale it, and how to ensure that you have a sustainable base as a business. So for us at Stanbic IBTC, we refer to this segment as enterprises. Out there, they're known as SMEs. For us, we look at the collective contribution of these so-called small businesses to the economy of the country. So today, the so-called small businesses account for 48% of our country's GDP, Nigeria's GDP, and also 85% of total employment numbers. So we do not see this as small in any way, and that's why we refer to them as, to you, as enterprises and entrepreneurs. So this afternoon, I'll be taking you through a couple of steps from business planning to funding to budgeting, preparing your feasibility studies, financial cash flow projections, record keeping, how to manage your taxes, and what to look out for when expanding. So for us at Stanbic IBTC, again, the enterprise segment is key to our business because we have a common purpose across the African continent that states that Africa is our home, we drive our growth. And in driving Africa's growth, we ensure that we put strategies and systems in place to support the budding entrepreneur. I'll go straight into business planning. So we're all aware that 85% of enterprises fail in their first 5 years, and 20% don't make the first year. Why is this? We've seen that over time, most of these startups assume that the only thing they need is funding. There's no proper planning. There's no roadmap to that business. They just see an opportunity or a supposed opportunity and they want to launch into it. For us, we're advising that you first have a business plan in place. What are the components or the contents of a business plan? You have to have your executive summary, which talks about the business you want to do, why you want to do it, what is the solution you are providing, what is the objective of this business, what is the problem you are trying to solve. You must have your problem statement clearly stated and then provide the solution in your business plan document. We're going to share, after this presentation, we're going to share a format of a business plan, a well-articulated business plan on our portal so that you can use it. Also, in the business plan document, you have to talk about your target market. Who is it that you're targeting with your products? Who exactly do you want to sell to? Are they youth? Are they the elderly? Or is there a geographical concentration you're looking to focus on? Is it somewhere in the north? Do you want to focus on the east or somewhere in the west? You must have a target market. Also, you have to look at what your competition is doing. You have to be very, very mindful of what competition is doing. You have to look at what exactly makes your competition have the market share that they have. What is the value that they are selling to their end users? How do you want to beat this value? What is your own competitive advantage? If you're coming to the market new or to this business segment new, what exactly are you bringing into the fold? What are you bringing to the table that will make the end user move from competition to you? Or is there a need? Is there a supply gap you are seeking to bridge? These are the things you need to ask yourself. These are the questions you need to answer to determine if you should go into a particular business. Also, very critical is your marketing plan. No matter how much planning you have made, how much funds you have invested, if you get the marketing plan wrong, then you have a problem. How do you market your product? How do you want to distribute? Who are your downlines? How do you get your products and goods or services across to them? All these must be captured in your business plan. Are you going to be using online platforms? Are you going to be selling your products on Instagram, on Facebook? You must capture all of this and exactly how many people you are looking to reach through each of these platforms. Also very important is the need to have a budget in place. What is the budget for this business? What goes where and why? How much exactly will I need to spend? How much exactly would I need to spend? Where would this business operate from? What is the location I'm looking to open or to use for this business? How close am I to my suppliers of input? These are the questions the business plan must answer. Also, what is your financial forecast? What is your break-even point? When exactly do you plan to make profit from this business? With all of this done, you have a comprehensive business plan in place. And then the next question, how exactly do I access funding? I must mention here that the 37 million businesses in the country today are your competition when it comes to funding. In fact, the external report of 2018 states that there are 44.3 million businesses in Nigeria today. So you must be mindful of the fact that you are contending with this 37 million or 44.3 million, as the case may be, when it comes to funding. Most of the time, startups tend to want to look to only banks for funding. And we'll be very, very, very open with ourselves here. Startups are at a disadvantage when it comes to getting funds from commercial banks, and I'll tell you why. And also what we are doing or what we have done to bridge that gap. Most of the time, you don't see a good business plan that is sustainable. There's no track record of performance. The cash flows are largely unpredictable. There's lack of experience in the management of the business because they're new. They've not learned the ropes. The management also is unstable. And they could change line of business at any point in time. So today I'm dealing in one product and tomorrow some of that product comes on that looks very profitable. Startups are very adaptable to moving without thinking twice. And this portends huge danger for the business. Also, the products are largely untested. And so banks are very careful when it comes to lending to startups. So today, what are the sources of funds majorly for startups? The key source of funds for startups are personal savings and loans from friends and family. Those are the soft loans that can come very easy and quick from friends and family. it's also very advisable to have your own equity. How much have you saved? How much is your own stake in this business? Because by the time you're talking to banks, by the time you're talking to investors, they want to know what is your stake in the business? How much have you invested from your own personal funds? Also, there's access to grants, government grants and funds from non-governmental organizations. Then there's access to funding from venture capitalists. These are equity investors that invest in businesses at different stages. We have Series A and Series B funding. Also, the bank loans. Banks fund startups, so we fund startups, but with very, very pertinent view of where the business is going. We want to see the end of that business. I'll tell you what we have done to support the other startups that we will not be able to fund. Also, another avenue is crowdfunding. Crowdfunding is simply aggregating funds from small sources through different investors to fund a project, and it can also be done online. After this webinar, you're going to get a link that shows you all the available and top venture capitalists in the country, and also crowdfunding platforms in the country. Also, there are angel investors. These are individuals that provide capital to fund startup businesses. Most of the time, they come in when mostly there is little belief in that business or that product, and they see an opportunity, they take an advantage and zero in on that opportunity. So that's it for startups. For existing businesses, you can access debt finance via overdrafts, term loans, local purchase orders, invoice discounting, agri finance, asset finance, export finance, trade finance, bank guarantees. These are all products that we offer. Also, you can access equity funding through equity investors, through IPOs, and through angel investors. These are mainly for, particularly the IPO, mainly for limited liability companies. Then also there are grants, government intervention schemes, development finance schemes, and specialized donor schemes. Moving on from funding now is cash flow management. Personally, I've come to realize that in a lot of cases, businesses are very quick to ask for loans. Once we see a gap, the first thing we want to do is to look for a loan. But time and over time, we've seen that in a lot of cases, just mere tweaking the way you do your business, mere looking at what can I move where can solve that problem. And I'll give an instance. I was at a seminar. I was taking some entrepreneurs, and a particular lady was complaining bitterly of how she wasn't getting loan from her bank. And I said, we'll take it up. And we met after the session. My intention was to find a way to give her that loan. But when I sat with her to discuss, I realized that if we could move the way she does her business a little bit and tweak it a little bit, she'll be fine. And what am I trying to say? So this lady has a business that's got very little margins and only makes a profit from volume sales. And she's saying that she has so much order that she cannot cope with. And I asked her, do you take upfront payments? She says, yes, just 10%. I said, okay, for you to be getting such orders you can't cope with, that at any point in time you're having 50, 60 orders and you're trying to meet up, can you demand for more upfront payment? Because if you take a loan, the margins that you're getting are so thin that the loan could wipe away that margin and threaten your business sustainability. So she took the advice. And by the next time I saw her, she actually demanded 100% down payment from her clients, and none left. So now she's been able to move her cash flow from a need point of view to a surplus point of view, and thereby not requiring any bank loan. So cash flow management is very key. Even when you're accessing bank loans, cash flow optimization is very key in your business. And which other ways do we manage cash flows? You have to manage your cost. For instance, you can lease assets instead of attractively purchasing them. You can lease generators or equipment. When you're paying rent, you can spread your rent over a longer period of time rather than actually paying your landlord upfront. And in most cases, you can actually start your business from your apartment, from your sitting room, from your living room. We know stories of so many successful businesses today that started from the starts cash management. Also, avoid credit sales. Let your business be cash and carry. Avoid credit sales as much as possible. Use supplier credit, that's spontaneous finance. Rather than paying your suppliers upfront, you could negotiate with them. Can I get raw materials and pay you back in 2 weeks or 3 weeks or after I've sold? And by the time you build a history with these suppliers, they are more amenable to giving you these terms. Also, keep overheads very low and save for the rainy day. Manage your cost. The virus case that has swept the world today is a clear case in point. So you can imagine any business in Europe today that has not saved. Such businesses may not survive the aftermath of this virus. One big event in the room, which is taxes. We see a lot of enterprises and entrepreneurs avoiding tax payment. For us, as a responsible financial institution, we encourage you to pay your taxes. And I'll also take you through how you can manage tax payment. So part of the feedback that I get when I facilitate sessions is, oh, the tax guys just look at the turnover and insist I pay a certain percentage of it, which is not actually in line with my profit levels. What we have realized is that entrepreneurs do not keep records. So when the tax man comes, you are left at their mercy. But trust me, they also want you to show records. They want you to show that this is the business I'm doing, this is the profit I'm making. And how do you do that? So you sell goods, for instance. At the point you are buying the goods, the seller, maybe you are buying from an FMCG, the seller issues you what we call a pro forma invoice. That pro forma invoice states an amount, say 5 million. You store it, you keep it. At the point you are selling these same goods to your own buyer, you are issuing an invoice to that buyer to pay you, say 5.5 million, you keep it. So the day the tax man comes and says your turnover is 5 million, pay X percentage of it, you bring out your invoice. This is my pro forma invoice. This is how much I got this goods. This is how much I sold it. My profit is 500,000, not 5 million. And then you pay your tax on that profit. So by the time you do that for an entire year, you will see that you've been able to manage your tax payment and you are more of a responsible citizen because you are paying your taxes duly. What are the different kinds of taxes we have? We have company income tax which is paid by limited liability companies. There's a new tax law now, a new tax finance law that states that companies between 0 to 25 million in turnover do not have to pay for limited liability. Between 25 to 100 million turnover will pay 20% in taxes, and above 100 million will pay 30% in taxes. Then also there's a self-employment tax, which is also applicable to entrepreneurs and enterprises. This ranges from 7% to 28%, as the case may be. We also have the value-added tax. It's sales tax that you take as you sell your goods. So it's charged to your off-taker and then you remit to the government. We also have the employment tax, which is tax paid on your employees' emoluments. Very quickly, we go to record keeping. We've also seen that a lot of entrepreneurs and enterprises do not keep their documents. There's no filing process in place. We have a slide that talks to what length of time each document should be kept based on the relevance to your business. So we recommend that for annual financial statements, for tax returns, assessments, stop orders, MEMATs, and association of articles and memorandums should be kept indefinitely. You must have filing for them indefinitely. General ledgers, employment contracts and stuff can be kept for 5 years. Creditor ledgers, petty cash ledgers, internal documentation can be kept for 3 years. Bank statements, vouchers, cash books, asset registers should be kept for a minimum of 7 years. payroll information, salary and wage registers 4 years, and check stores for a year. Now to expansion. When is your business ready for expansion? When is it due for expansion? Most of the time, a lot of enterprises want to expand because they just think it's time, or you see your competitor expanding, or is it the right time for your own business? What are the things you look out for before you should expand? There has to be a demand that you're trying to meet. That means there's a supply gap that you're trying to meet before you can say you want to expand. Also, will the expansion result in price cutting to your clients? So because you're now expanding and you'll probably be producing more goods, it's supposed to lower your cost of production if you're very efficient. So that cascades to your clients and they're able to get the products at cheaper rates. Are you looking to achieve that? Also, are you looking to expand beyond your immediate office premises or within the premises? And I'll tell you one thing. If today you are still on the dance floor of your business, you are not ready for external expansion. Let me say this again. In your business today, it's either you are on the dance floor, you are still dancing around, you are involved in everything, or you have a balcony view. If you have the balcony view, that means everything is happening with minimal supervision from you. That means that at that time, if you choose to expand beyond your immediate office premises, your business can be sustained. But if you are still on the dance floor of your business, I recommend that you only expand within your premises. Maybe you are adding additional production lines or something, because you are needed to supervise that business on a day-on-day basis. So that's something critical to note when it comes to expansion. Also, you must ensure when expanding that the outcome, the product they are coming out with, is not of less quality. So increase in volume production should not lead to a decrease in quality. Else, that expansion may be inimical to your business goal. And that's why we recommend a gradual expansion rather than an aggressive one. Having said all of this, how exactly is Stanbic IBTC supporting enterprises? Excuse me. For us as a bank, I mentioned earlier that a lot of enterprises assume that funding is the key problem for them. But we've seen that even when funding has been made available, a lot of enterprises and entrepreneurs still struggle to achieve business sustainability. So for us, the very first thing that is most important is access to capacity building. So Stanbic IBTC Bank today has signed an agreement with the Enterprise Development Center of the Lagos Business School to train and develop 3,000 entrepreneurs this year. And the course content ranges from business development to cash flow optimization, business planning, market and competitor analysis, funding requirements, people management, human resource management, product development, excellent customer service, name it. And by the time these entrepreneurs graduate from these sessions, they are more rounded. They are better managers of human and material resources. And I'll give the feedback I got from one of the sessions we had. So we had finished the session, and we had congratulated all the graduates. It was at the LBS at the time. That was last year. And I was waiting for my driver to pull up to the foyer so I could leave the venue. And one of the entrepreneurs walked up to me and tapped me and called me Mr. Stanbic. That's what she called me, Mr. Stanbic. And she said, "Thank you very much for this program. Thank you very much for this program. I am a better person today in just this 1 week that I've been here." And she said something that touched me. She said, "Look, even though the aim and part of the expectation is that this program will give me access to funding, access to finance to support my business, that if for any reason I do not get that funding, I will not feel bad. because the value that this program has added to me is more than any loan that any bank can give. That was what she said, and I was very touched by that. And it's just instructive that this is very critical. Another man said he's actually a painter. He told me he had 3 MBAs, but that there is none of those courses that addresses his real business needs, like the capacity building session we had for him. He was so appreciative. So that's very key for us, and we're driving it, and also ensuring that in these sessions we have very good representation of women. So every class has minimum of 40% female participation, minimum at the minimum. Also, we have a robust women product in place where women have access to cheaper funding and easier loan availment terms. We have partnerships with local and foreign investors who invest in startups. So there are agreements that we've signed that for startups that we cannot fund as a bank, we pass it on to these investors, some are local, who review it and then express their interest to fund. Also, we have access to all sorts of loans ranging from enterprise overdrafts, contract finance, short-term loans, invoice discounting, distributor finance, trade finance, agri finance. And also we give you access to CBN intervention schemes, namely the Smes scheme, that's the agricultural small and medium scale investment scheme, the KIFI fund, that's the creative industry fund, the CAX funds, that's the commercial agricultural credit scheme, and the real sector support fund. All of these funds are available with Stanbic IBTC Bank PLC. Also, we give you access to cheap DBN funds. We have disbursed in excess of 25 billion in DBN funds alone, and we give these funds at very affordable rates. Other products that we have are zero account fee accounts, and we also have sole trader accounts. These are accounts that you can run in your personal name and you are doing your business. So there are business accounts that are run in your personal name. So you don't need all the certificate of incorporation and all the other requirements. You don't need them. Also, we have a very vibrant Africa-China banking desk, and we have solutions that solve your trade needs. And I'll give an instance. I'll give an example rather. We did a survey and realized that a lot of our customers bank and do business with China, we do trade with China, and they have the same generic problems across the board. That's access to credible suppliers, access to quality goods. How do I secure my payment? What are the payment terms? When I travel, how do I get an interpreter and all of that? And also, how do I spread my payment? The Chinese supplier today insists on 100% down payment, but they don't need that payment. They don't need the funds. They're just not sure that we'll make the balance of the payment when it's due. So our proposition addresses all these problems. We have an approved agent, and for those that may not know, Stanbic IBTC Bank PLC is 64.1% owned by the Industrial and Commercial Bank of China. Sorry, Stanbic IBTC Bank PLC is 64.1% owned by the Standard Bank of South Africa. Standard Bank of South Africa is in turn 20% owned by the Industrial and Commercial Bank of China, ICBC, which is the biggest bank in the world. ICBC has a parental affiliation with us. So we leverage on that parental affiliation to develop a product where we have an approved agent in China that our clients can place orders through. Once our clients place orders through this agent, there is quality guarantee because this agent has over 35,000 suppliers, and any order placed through them, you are assured of the quality. If the order comes through and the quality standard is not met, the agent will either refund the funds or replace the item. Also, there is access to flexible payment terms. Our customers can now spread their payments, pay 10% down payment, 20% down payment, as the case may be, rather than paying the full funds upfront. Another solution that it brings to the fore is that we have a travel arrangement where our clients that are going to inspect their goods would have logistics support. where they don't need to pay any money for. Also for visa application. Our agents in China write to the Chinese government, they avail us the letter of government invitation, which our clients take to the embassy here to apply for their visas, and then they can travel to purchase their goods. Also, we have a very competitive advantage on that product because our clients have access to better pricing, which is a key attraction for our clients. We have also launched a trade club where our clients can do their trade beyond Nigeria, across the African continent and across the world. So you can put your products on that platform, and then you will have buyers negotiating with you and also off-takers negotiating with you. We have access to transactional banking platforms. Internet banking and enterprise online platform are highly adaptable to clients' needs, fast, secure. We have a mobile hub for our retail business. We have POS solutions, Seagate collection support solutions, and we have very robust support systems to ensure that these portals are running optimally. We also leverage on our universal banking license. So we call ourselves a one-stop financial institution, and we have a universal financial service offering, which cuts across stockbroking, pensions, trusteeship, insurance, and also advisory services. We have also developed what we call the Africa-China export proposition. This is to support our export customers who seek to take their goods to China to sell. We're also playing very actively in the fintech space. We're in partnership with Founders Factory of South Africa, whom have selected 5 techpreneurs in Africa, 2 of which are from Nigeria, to take to multinational level, to the likes of Facebook, if you will. We also have partnership with Founders Institute of Nigeria, where we partner with them to train and accelerate techpreneurs. Recently graduated 20 of them, and they're doing very well. So in Stanbic IBTC, we have all these solutions waiting for you to take advantage of. In closing, I'll leave you with these tips very quickly for all entrepreneurs. Please listen. Plan, forecast, and prepare an annual budget. Distinguish between your cash and your profit. Ensure customer satisfaction. Build a track record of performance and delivery. Delay your gratification. Defer immediate gratification. Be mindful of competition. Take advantage of social media to drive your business. Let your word be your bond. Be mindful of political, social, economic, religious, and regulatory risks. Digitize your business. Borrow rights if you have to. Have a succession plan. Expose yourself. No amount is too much to invest in yourself to develop your business. Your time is precious. Use it well. Never underestimate insurance. I've seen businesses that the only reason they could continue was because they had insurance when things went awry. Maybe in the event of a fire or something, there is insurance there to pay you, and then you can continue your business. Care about your health is very important to your business sustainability. Always question how your business can be done better, faster, and more conveniently. Be optimistic about possibilities. Take calculated risks. And most importantly, execute, execute, execute. You can reach us through our digital bank. We have a digital bank called Enterprise Direct, where our enterprise clients are serviced out from morning 8 a.m. to 5 p.m. without any hindrance. Email is enterprisedirect@stanbicibtc.com, and the phone number is 01422 0003. Thank you. We'll take questions now.
Thank you, Mr. Ayodele Ojosipe, for the wonderful presentation. It was highly insightful, and I learned a lot sitting down here and watching you, especially the dance floor of your business. I hadn't heard that phrase before, but I guess it's something you coined and made it relatable in that sense. We have a few questions here that we want to ask, and I'll just pull them up right now. Essentially, just trying to get your view, your perspective on some questions that I'm sure you've touched on every area, but there are a few other things that glean more from by speaking with you. Now, what's your view of the SME space in Nigeria in general?
Enterprise space, people in enterprise in the country is very vibrant. It's actually the core fabric of the economy. That is what sustains the economy. Like I mentioned earlier, they account for 48% of our GDP and 85% of total employment numbers. So as participants in this industry, as industry players, we must continue to invest in that segment. We must continue to support that segment. We must continue to bring up policies and procedures that make business flow easy for them. Today, we have about 44.3 million based on the FINA report. And the question is, how many of these, right, are actually at the level where they are beyond just trying to survive? How many have gotten to sustainability stage? How many are at an advanced stage of their business? How can we help them elongate the life cycle of their business? How do we provide solutions that sees them through recessions and business downtimes? So we'll keep investing in it and keep supporting them.
Thank you for those reassuring words. So I will ask a question that I'm sure many business owners don't think that can ever happen to them. But why do small businesses fail? Give us some insights about some business planning.
So most of the time, you see cases where businesses are not well thought through, right? Somebody just sees an opportunity and all you're thinking about is, I can make money. You've not thought through the entire process of going into that business. Or in some cases, you've thought through and you've taken certain things for granted. And I'll give you an instance. So there was this man that I know that took a bank loan. He used his property as collateral, his own residential property. At the time he was starting that business, he took his bankers to the site he was supposed to open the business at. After he got the money, somebody offered him another cheaper land where he could build the property. He says, why can't I sell this one that is more expensive and buy a cheaper land somewhere that is more interior? After all, it's a factory. So he took that decision and bought that other land. He had gone there, yes, there's been no light, but he went to the PHN office and he was assured that they were reconnecting, the grid was going to be constant. And he put that business there. 2 years down the line, that business was gone. Because he never had power one day. He had, yes, diesel 24/7. He had to invest in a generator, which took part of his capital. Money was supposed to be using to run the business. So this kind of hasty decisions, trying to cut corners to ensure that we are optimally profitable is inimical to the business growth. So in a lot of cases, you see that a lot of enterprises don't plan or they easily deviate from the plan. That's why a lot of them fail. But for those that have a plan and follow it religiously, and also listen to mentors that have been in it, because also mentorship is very key. People that have been in that business, that have made a name in that business, what are their learning points? What are the mistakes they made that I shouldn't make anymore? Yeah. If you're able to listen to such, it will help you know how well to scale your own business.
So, have the right people around you.
Right people, yeah.
And to be able to right management and get access to the right kind of information.
Yeah, keep to the plan.
Keep to the plan. So cheap is not always the best. It's not always good.
It's not most of the time.
An SME generally get access to funding. I know you touched on some of those very good, but as you also alluded to it, it's one thing that everybody's always talking about: funding.
So for us as a bank, we have a process where we evaluate a business, start up, and if we can fund it, we go into it. If we can't, we have partnerships with local investors that fund such businesses, so we send those businesses to them. But largely, a lot of startups get funding from personal savings, from family and friends, because again, your network that you've built helps you when you're about starting out. In a lot of cases, you are pitching to investors, they're not so convinced. There's some gray area that they are very skeptical of. But people that know you over time, believe in you, say, I trust this guy. They're able to take something from you. Also, your personal savings. And then there's grants and loans. Grants and loans that are available from intervention partners. Also, you have venture capitalists that invest equity in the business. You have crowdfunding where you can aggregate funds from different people to access funding for your startup business, and generally intervention schemes also.
You talk about grants, and grants are typically, let me just talk about, they're typically for non-profits, if I'm correct, mostly, and also you have a grant from some government institutions. Yeah. Now, what advice do you have for SMEs on cash flow management? I have a lot of friends, a lot of people that I know that that's their biggest issue. It's always having access to that cash that they use to operating capital and that core cash flow. What kind of advice do you have for them?
I think as much as possible, take advantage of your business dynamics. Where you can push for supplier credit, push for it. Where you can ask for down payment or upfront payment, ask for it. Because in a lot of cases, we're also funny people. We get something free. You see cases, I've had entrepreneurs tell me, somebody placed an order I produced, and the guy's not coming to pick it up. Why? Because he has not parted with anything. He has not parted with any finances. Or if he has dropped part of his funds, or if he has paid fully for that item, he'll come for it. So these are the things that affect entrepreneurs. Or you start a business and, oh, he's my friend. You sell on credit. So that one is my brother. It's my neighbor. It's my church person. You sell on credit. That business is heading for the rocks. So as much as possible, make sure that your cash, you secure it jealously as much as possible. Then whatever cost you can spread it. If you don't have to take rent, don't go and take rent. Use your apartment to start the business. Use your car garage for your store, for instance. So that's how to manage your cash flows.
Grow at a pace that is sustainable.
Sustainable, yeah.
First thing you want is to get a massive profit. You're paying hundreds of thousands of naira every year from a business hasn't generated.
And also separate your profit from your capital. In a lot of cases, the entrepreneur mixes the capital with the profit.
So can you touch on that a bit? Because sometimes it's a bit confusing.
Yeah, so for instance, you need to buy a car. For personal use, maybe for your household use, the business has not generated that amount of profit, but you buy it anyway because you can see it on the run. What you've done in reality is you've dipped your hands into the capital of that business. You've reduced the opportunity of growth of that business by the percentage you've taken out. Something else comes up. Oh, it's medical bills. Of course, medical bills. What can you do? You take it anyway. Rent comes up. You take it anyway. School fees comes up. You take it anyway. The business is no silent. But if you're able to maintain your profit on one side and you're only spending for your profit, no matter what, that business will survive.
Thank you for that. So, tax management. A lot of SMEs are always putting their hands on their heads. But I think these new tax laws have sort of softened the stage for SMEs and classified it. And you mentioned that earlier.
Yeah, I did mention. I think the major complaint that I get is that the kind of figures that the entrepreneurs get from the authorities when they come to audit their books is, in their view, unrealistic. And I say again that what the taxman wants to see is that you understand your business and you can justify what you're claiming. In a lot of cases, the entrepreneur does not have that justification. You just say, oh, my business, I did only 10 million turnover and my profit is 200,000. How? You can prove it. And I'll explain how you can prove it. Get invoices. The pro forma invoice, how much you paid is with you. Your invoice for your own clients, how much you sold, documentation. So they come and say, oh, your turnover this year is 100 million, for instance. This is the total PFI I got. This is the total that I sold. My margin is 1 million. So you are paying tax on 1 million and not on 100 million. And to your point on the government also making it flexible. So any limited liability company today that does below 25 million turnover does not have to pay tax, but have to have a tax identification number. Yeah, it's free. Sure, it's free. In fact, we're going to also share a portal where businesses can, for those that don't have their team, they can register and get their team. I'm going to share that link on my product. Have that available.
Because I know it's a big issue. I mean, I know people who have to pay years later.
Yeah.
Because it's somewhere they can get it.
Sure.
So expansion, we talked about that a bit. At what point and at what kind of expansions do we talk about? What are we talking about? So, I mean, you mentioned earlier, not how many, 20% of businesses don't pass the first 5 years of operation. And the ones that survive, what do you have for them in terms of expansion? What kind of advice would you have for them?
For expansion, you have to understand the need for the expansion in the first place. Is there a gap? Is there a gap? Also, will this expansion affect your product pricing or not? Because in a lot of cases, when businesses expand, they're able to procure larger quantities and are able to negotiate supplier pricing and all of that. If that would help you, fine. But again, you must ensure that you have markets for this product. You have markets that is ready. There must be demand. There must be demand. You don't just expand because, oh, you want to have 5 outlets. And like I said, if today you have 1 outlet and you are still running on the floor of that outlet, you cannot open another 5. You must be able to take your business to a level where it is self-sustaining, right? Where you are overseeing and calling the shots from a level that gives you that access to see everything across the board. Then you can easily expand. If you're just expanding your lines in the same premises, yes, but you must ensure that that market is there and that your customers will remain satisfied with the quality you're churning out.
It's not necessarily a case of, oh, we're making X amount of money from this, now we can do it, we can get a bigger facility, we can get bigger machines, we can get any of those things.
That shouldn't be the driving factor.
The market fundamentals are critical.
Very essential.
Okay, one last question. What products and services do you have to support SMEs? I know you talked a bit about that, but maybe just to highlight them a bit further.
Okay, so like I said, I mentioned that we do capacity building, and
that's at no cost to you.
At no cost. At no cost.
Really?
At no cost to the enterprise, fully paid by Stanbic IBTC Bank. And we're doing about 3,000.
I'm going to sign up with this.
Please. And also to all the entrepreneurs online, they're free to sign up for it. We'll give you that special concession. Ordinarily it's for our clients, but by the virtue of the fact that they're on this line, we welcome you as our client.
Thank you very much.
So we do that. Also, we have products that support women in business. In fact, our group, Standard Bank Group, invested $3 million in the Women Entrepreneurship Finance Initiative that the UN is driving. And today in Nigeria, we're looking at reaching about 15,000 women with that initiative. Also, we have products and services that ranges from overdrafts, term loans, LPO finance, contract finance. We're very passionate about the agricultural sector. Lots in that sector. In China as a country, right? About 60% in China. So we have developed that solution to ease that flow of trade between China and Nigeria. And this solution is proprietary to Stanbic IBTC. No other person has it in this industry.
You hear that? Just Stanbic, no other person.
No other bank has this in the industry.
So if you have any business dealings you want to do with China, Stanbic is your go-to bank.
Yeah. We also support the tech space. We're very passionate about tech because, again, everything today is driven by technology. We sponsor cohorts through accelerators and identified partners like Founders Institute.
So you're trying to pass them young and early.
Absolutely. So we did one recently and had 20 graduates, tech graduates, that we're also working to support. And the aim is not just to train these people and support their acceleration. We also want to give them a platform. We want them to leverage on our platform as a bank. How can we help them reach out to our clients? How can we help them take advantage of our reach and our spread? Market access. Also, talking about market access, we have platforms that enables you reach out beyond the shores of Nigeria. And also that fits into expansion.
Yes.
So when we're talking expansion, we're not limited to thinking just Nigeria. We're thinking beyond the shores of Nigeria. So you are manufacturing, you are producing a creative art today. Can you sell it in Namibia? Can you sell it in Kenya? Can you sell it in South Africa? So these are the things that we do and the access that we create for our clients.
Thank you for once again for coming on Blue Talks webinar, Mr. Ayodele Ojosipe. It's been really insightful, educative, and I think entertaining. Again, don't forget this phrase. You heard it here first, though. The dance floor of your business. I still don't know what it means, but I like it. Thank you for tuning in. You'll be able to get access to the recording after this, after the show ends, and you'll get access to the resources as well. This has been our edition of Blue Talks. Until next time, keep moving forward.
Thank you.
Thank you.
Thanks.